Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully you've all had a triumphant Tuesday. Today we're going to be diving into our daily cryptocurrency market update, and we're going to be doing very much the same thing that we do on all our market updates, and that's looking at Bitcoin. We will be going over our macro view because that hasn't changed. We're still expecting more downside for the cryptocurrency market. But what we're going to do to start things off is we're going to be looking at the 4-hourly chart, and we're going to be looking at the range that we are currently in. Now, this is a great range for intraday traders because you've got clear points of invalidations and divergences, and you've got targets to aim for in regards to scalping percentages in this range. But one thing I really want to talk about, and we're going to get into a number of things in this video. We're not just going to be looking at the technicals for Bitcoin and really the crypto space. We may go over a number of altcoins. We're going to be talking about a little bit of news as well. The news at the moment is very much boring. There's not a great deal happening, and it's a real kind of testament to the market that we're in. You know, I'm watching so many projects fold under the market pressures at the moment. You know, crypto does recover, guys, but right now, I don't think it's going to fare well given the environment that we're in. And that's been something that we've been talking about now for a while, and that is still the plan. That's why we always start the video off. We're doing it slightly differently today and starting on a smaller time frame with our sort of weekly chart and looking at the long-term regression bands for Bitcoin, because ultimately we definitely believe, and we could be totally wrong, that we're coming down to the lower bands at around about that 23, 24K range. So if we look at this range, guys, you know, we've been ranging now for essentially 11 days. And one thing that I want to know is when we get a clear momentum break to either the up or the downside, I think that's going to really start more of a swing-based movement. And we are looking for shorts. We're not currently in terms of a big swing trade position short at the moment, just simply because we're in this range. And right now we're just chopping. You know, there's nothing to say that we don't start to climb back up here and continue to range. But one thing that is worth noting is just how much more aggressive these down legs are actually getting. And you can see 1, 2, 3, 4, 5 touches to the upside, all being rejected. And in actual fact, when they get rejected, they're rejected with a lot more momentum in terms of a 1 4-hourly candle than we see to the upside. You know, very good saying out there that's quite trivial, that bulls go up the stairs and bears go out the window. And that's applicable to the small time frames as well as the larger ones. And this is just a trader-driven market. And one thing you've got to really look at is, okay, well, if we're expecting relief, where does that relief come from? Potentially a break of this upper range. But ultimately, the conditions, and one thing that I found rather interesting yesterday was, you guys know that we watch the equity markets. Equity markets actually closed rather positively yesterday. Crypto did not follow that trend. And in actual fact, saw a huge slam down towards the end of the day. You guys know that we were long from around about here. And ultimately, the second you see this divergent, which is why we have these lines here, you take your profits. This is why we've got these targets in terms of an intraday trade. We're not looking to hold our trades on a day-to-day basis for any kind of length of time. You know, we're not biased to things going up or down. We're just going to trade what we have. Ultimately, we are biased to more of a long-term swing trade. What I would have liked to have seen is something like this. You hold here, and then we get the continuation to these ranges before we can take that confident swing trade. That still may be the play. And everybody right now is looking for that relief, and it just doesn't seem to be coming. And it's strange because the DXY would have actually been very accommodating given the weakness that it's seen, whilst we've essentially been range trading to the downside. So the dollar's actually come off soft. Bitcoin hasn't reacted very well to that. And even some of your equities are getting a bit of a break at the moment, which, you know, it's weak across the board, guys. And ultimately, we've still got, and we'll go up to our sort of broader time frames. We'll put on the long-term regression bands. We'll get rid of all the drawings that we've got. You know, we're still looking for downside here, guys, towards your sort of 23, 24K range. Also, you've got your 200 EMA on the weekly down there as well, which has been quite a... it wants to gravitate towards here, in my opinion. That's why we always look at this long-term regression bands, because ultimately our overarching bias is that this market sees more downside. And on an intraday basis, you know, it's not really worth betting against that, I don't think. And that's, you know, why you've got to be exceptionally careful when longing and shorting this market, because it's just showing weakness across the board. And this could quite easily spill, certainly come back down to where we wicked off, and then see further downside continuation. That's the play for now. Bitcoin does that. You guys already know what the story is going to be with altcoins. You know, we did see, and we are catching a bit of a break. Very common in the mornings, certainly in the UK, that's what happens. We are watching the other markets. FTSE is somewhat opening up again today. Is this short-lived? I would argue potentially, because of the macro headwinds that we've got. And we actually posted something on our Twitter earlier. You know, we had a lower CPI print, certainly in the US. The UK came out horrific at 9%. I mean, that is really, really bad. But when they talk about inflation peaking, watch your commodities, because they don't seem to be peaking. In fact, they seem to be actually running quite strong. And in terms of natural gas, is going on and putting in a new all-time high. So the whole reason markets are facing this kind of a downturn is based on what the Fed are doing. And what the Fed are doing is based on inflation, essentially. So if inflation persists and goes higher, they're going to have to get more aggressive. We've seen the aggression that they've shown so far be very risk off for assets and actually damage assets. And it goes back to March 2020 and the huge run up that we've had in regards to markets getting backed essentially by the Fed and being very, having a lot of liquidity pumped into them, to now being very regressive and in actual fact damaging. And just because Bitcoin sort of, and people keep looking at these weekly candles and going, okay, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 weekly candles now. If this one, it closes by the end of the week, surely we've got to get relief from somewhere. But that relief just is simply not here at the moment. And I think the reason we started on this range is really because, what do you think happens if we break this to the downside? You know, when we look at this range, what do you think happens if we break below this level convincingly with momentum? How many stops in terms of longs do you think are down here? We know Bitfinex longs are aggressive at the moment. If we see a move down, you know, I think people end up getting stopped out. I also think people will look to get rid of spot. I don't think all the sell pressure that we've seen, and of course we had a huge exhaustion in regards to sell pressure with the whole Luna situation, but I don't think we've seen all the sell pressure that we are going to. I think people are actually looking for the rally, like we somewhat are. You know, I still think this market could rally, but it's not worth betting on that whilst we're in this range. And typically, the longer that you range and consolidate, the more aggressive the move is going to be to either the up or the downside. And if we look at volume down here, guys, you can see just how weak it is. It doesn't take a lot of money right now to move these markets to either the up or the downside at all. And any kind of spike in volume that we get, you know, is going to cause this market to move. And I still think there is the scope for more upside. But whilst we're in this range, okay, sure, intraday trade it if you want and look for your levels. Remember to take profits, guys, because there's nothing worse than having to give it all back when the market goes against you. But whilst we're in this range, the probability to either the up or the downside, short term, isn't very clear. And once we start, you know, for example, if we did get some sort of a momentumful move, come up, you reject, that's confirmation that, look, get ready for these targets down here, guys. And they go a lot lower. And we are looking, in regards to the long-term regression bands, at your sort of 24K range. I don't think that we're going to avoid that. I can still see a push up, but ultimately, you know, until we get out of this range, it's very range-bound and trader-driven. And you're not going to have any kind of real confirmation in terms of a swing trade until you start invalidating some of these levels and these key range bounds, if you will. So that's, you know, was pretty disappointing that Bitcoin did what it did yesterday. I thought it actually may be set up for some sort of a rally, given how the stock market and everything was holding up, and we're still seeing quite a weak dollar. The dollar turns today, guys, it's more downside. You've got to watch all markets now as a crypto investor, and that's why we do these daily videos where we go through everything. I mean, we pulled up nat gas. That's hugely important in regards to the macro landscape, because if inflation persists and continues to go higher, well, guess what? You know, that is not a good outlook for the economy generally. And even things like oil are getting somewhat of a bid after coming back off their highs. If this goes on higher and we see everything go on higher and there is an environment globally that suggests that may be the case, ultimately, it's going to be negative for assets across the board. And yesterday we were range trading Ethereum. Ethereum was a nightmare because it got hit, of course, with Bitcoin doing what it did, it got hit hard. And you can see just how harsh these rejections are to the downside. And they're almost getting harsher, which is people are looking for the shorts just like they're looking for the longs. And I think the short pressure is significantly more than the downside. And when you really ask yourself the question, okay, well, who's going to be bidding up these markets? You tell me. Michael Saylor, maybe. But I'd argue Michael Saylor is flying very close to the wind. There is a lot of speculation that Michael Saylor's liquidation price, because he'll have a credit line just like every other big institution and corporate, he also has a company that he's got to sort of maintain, would be around about your sort of 22, 21k range. So we're still expecting downside. Again, bringing up our long-term regression bands. But ultimately, there could be chop within that. And typically you do see some sort of relief, which we're actually not finding at the moment, even though we do have a across-the-board financial landscape. Weak dollar, equity market actually held up well yesterday. It still sold off in the face of all of that. So just be very careful out there intraday trading. And ultimately, remember to take profits. That's one of the biggest bits of advice I can give people. People will be in the profits by a decent percent and not take it. Because they're so used to investing that you've got to remember, swing trading, guys, if you can scalp whatever it is, take it. Because you right now, it's not a guarantee that markets continue in one way or another until we get out of these ranges. Talk about a little bit of the news to wrap things up. ECB warns that crypto risk could spill over into wider economy. In actual fact, it's almost the other way around, really, isn't it? It's the wider economy that's actually spilling over into the crypto. And that's when we look at the crypto space, the main reason for it selling off is not due to failings within the cryptocurrency market, more the macro backdrop and how that's significantly affecting everything. We've got here, Fed reports finds most Americans who own crypto tend to be high income holders. And I think when we talk about the middle class and we talk about the economy generally, they're going to start getting really squeezed because they're going to be getting hit not just with their crypto portfolios, in their stock portfolios, and also probably by their housing. There's a lot of scope for housing downside given the demand that we've just seen and that kind of coming undone. When you add the Fed funds rate and mortgages becoming a lot more expensive and a huge decline in mortgage applications, there's lots of angles to look at the moment, not just for crypto, but markets across the board. So that's really all I've got for you guys. We will be watching this and keeping you up to date every single day. If that sounds good to you, make sure you hit that subscribe button, hit that like and comment button, as we do appreciate all feedback that you guys leave. So that's all I've got, guys. Enjoy your Tuesdays, and I'll catch you all in the next YouTube video.